All right, let's move on to an example. We've looked at a lot of theory now on that first page, but everything makes a lot more sense if we actually just look at it with an example. So in example 1, we've got Jasmine Pty Limited has the following information concerning their 2 product lines. So we've got a company over here that makes 2 different products, product A and B. We've got the machine hours per unit. It takes 4 hours to make product A and 6 hours to make product B, and that's the machine hours per unit. They give us the total number of setups for the entire year. So for product A, we have 5 machine setups, and for product B, we have 2 machine setups. They give us the number of production units per annum and the budgeted setup cost for the year. So they've got a budgeted cost of 200,000 Rand. Now, what I'm going to do in this example is show you the differences between traditional absorption costing and activity-based costing. So you can see we need to calculate the machine setup cost per unit. So they don't want it in total, very important, they want the cost per unit for product A and B. First, if Jasmine Pty Limited uses traditional costing based on machine hours, or in B if they use activity-based costing. All right, so with traditional costing, remember you can use units, you can use labor hours, you can use machine hours. Here they're telling us they're using traditional costing based on machine hours, which means if we need to calculate our allocation rate using traditional costing, we are going to say our allocation rate is our total budgeted overhead cost divided by normal capacity, and in this case, they've told me to use machine hours. Okay, I already know what the total budgeted cost for the year is. The total budgeted cost for the year is 200,000 Rand. Now, please be careful. The mistake a lot of people make when they divide by machine hours is they say product A is 4 hours, product B is 6 hours. They add that together and they get a total of 10 hours. That's complete garbage. That gives you nothing. Please don't do that, guys. You are taking a total cost over here for the entire year. The total budgeted cost for the whole year is 200,000 Rand. If we want to work out an allocation rate, you need to be consistent. You take the total cost for the whole year and you divide by the total machine hours for the whole year. Okay, the number of machine hours for the entire year. So what we need to do is, it's not as simple as just adding the 2 together like that. We need to work out what the total machine hours are. So 4 hours per unit times 2,000 units, 6 hours per unit times 3,000 units. So that is the calculation that I'm doing over here. Okay, work out your total machine hours. Then once I have my total machine hours, I can work out this absorption rate. Total budgeted cost for the year divided by total machine hours for the year, and I get an allocation rate of 7.69 Rand per machine hour. So that's what I do first up front, is I calculate this allocation rate. After I know what my allocation rate is, I can then apportion the cost between the 2 different products. So all I'm doing, guys, is I know I have a total of 8,000 machine hours to make product A and 18,000 machine hours to make product B. So I take this allocation rate that I've calculated and I multiply it out by the number of hours. And you can see all I've done is I've taken the total cost of 200,000 Rand and I've apportioned it between the 2 different products using machine hours as the basis of my calculation. All right. Now, look at your lecture notes. Does the allocation of our setup costs seem to be fair? Okay. So guys, we are not dealing here with the total overhead cost for the company for the year. I've specifically told you that this is the setup cost for the year. And if we allocate the setup cost between the 2 different products using machine hours, you can see the problem is because product B has got a lot more machine hours than product A, we are allocating a lot more of the cost to product B and a lot less of the cost to product A. Because we are doing the allocation based on machine hours, we are allocating more of the cost to the product that has more machine hours, logically. However, this is a setup related cost and that does not make any sense. Instead, what we should be doing is we should be allocating the cost based on the number of setups. Product A has 5 setups per year and product B only has 2 setups per year. So if product A has so many more setups than product B, it's not fair that we are allocating more of the setup cost to product B. That doesn't make any sense. Okay, so does this allocation seem fair? No. I would expect more of the cost to be allocated to product A, as it is responsible for more of the cost. Why is product A responsible for more of the cost? Product A has 5 setups per year and product B only has 2 setups per year. So product A had more setups. Okay, so that definitely doesn't seem fair. We're allocating the setup cost using machine hours, so we end up allocating more of the cost to B, but product A has a lot more setups than product B, so actually product A should be allocated more of the cost. So this doesn't seem fair at all. So you can see this is a limitation of traditional costing. Then just to take this a step further, guys, if we want the cost per unit, please just take the total cost that you have already calculated above over there, and you just divide by the number of units that we were given in the question so that we can get the cost per unit. Why am I calculating the cost per unit? Because the required specifically said, calculate the machine setup cost per unit for product A and product B. So don't just split the total cost between the two products, but they actually want me to calculate the unit cost. So please read your required very carefully, because you can miss out on easy marks by just not actually calculating your unit price over there. Now let's see how this changes if we use activity-based costing. So using activity-based costing, all we do is now we look for a cost driver where there's a cause and effect relationship. So when I'm calculating my activity rate, so instead of calling it an absorption rate or an allocation rate, we now just call it an activity rate. We are going to take the setup cost and we are going to divide by the number of setups. So first thing is we don't just look at the total cost for the whole year, we actually look at what the cost is made up of. We analyze it in detail and we pick a cost driver where there's a cause and effect relationship, not just a random cost driver like machine hours in part A of the question. So now you can see, guys, we take the total machine setup cost for the year. The total cost for the entire year was 200,000. Divide by the total number of setups for the year. What was the total number of setups? Product A needs 5 setups for the year and B needs 2 setups for the year, giving us a total of 7 setups for the entire year. So you can work out your rate per setup. Please just note, these were already the setups per annum. It was not the setups per unit. It was already the setup per annum. So it's the total number of setups for the entire year, which is what we want. Take the total cost for the entire year, divide by the total number of setups for the entire year. Then once we have that, we can apportion the cost between the two different products. So we take the rate per setup. We know that A required 5 setups for the year, B required 2 setups for the year, and we apportion the cost between the two different products, and instead of using machine hours, we use the number of setups. And again, you guys can see the total still ties back to my total of 200,000 Rand. That hasn't changed. My total cost is 200,000 Rand. But when we use traditional costing, we allocated more of the cost to product B because product B had more machine hours. But now you can see, because product A has more setups per annum, product A is being allocated more of the cost and product B is being allocated less of the cost. And then again, make sure you actually answer the required get your cost per unit. And then once we have the unit costs, we can then discuss this in a lot more detail. All right, so when we looked at traditional costing using machine hours, Those were the 2 unit costs we calculated. With traditional costing, you can see we over costed product B because product B had more machine hours. So we over costed product B and we under costed product A because product A had less machine hours. So you can see in our discussion, when we use traditional costing, we allocated more of the setup cost to product B, and this was because we were using machine hours as our base, and product B required more machine hours than product A. So the problem with traditional costing is it is less accurate in the costing of our products because we are not picking cost drivers where there's a cause and effect relationship. We are just using random or arbitrary cost drivers like machine hours. However, when we now look at activity-based costing, more of the setup costs are now being allocated to product A. So we can see product A is now carrying more of the cost. And this is because product A had more setups. And when we are using activity-based costing, we allocate more of the cost to the product that caused the cost to occur. So because product A is responsible for more of the cost, product A had more setups. So product A is responsible for more of the cost. It's allocated more of the cost. Product B had fewer setups, so they were allocated less of the cost. So obviously this results in a much more superior way of costing our products. So to wrap this up, guys, 2 important considerations. When we use activity-based costing instead of traditional costing, does our total overhead cost change? So what I'm asking you here, when we use traditional costing, my total cost over here was 200,000 Rand with traditional costing. I had a total cost of 200,000 Rand. And with activity-based costing, I also had a total cost of 200,000 Rand. Does your total cost change? No. The cost in total does not change, but the apportionment between the products, that's what changes. Okay, so does the total overhead cost change? No. Only the allocation between the products changes. Okay, in both cases, we saw that the total cost was 200,000 Rand. If we split it using machine hours, we just allocated more of the cost to the product that had more machine hours. If we split it using setups, we allocated more to the product that had more setups. But in total, the cost did not change. Does your prime cost change? Well, before you can answer that question, you obviously have to know what your prime cost is. It is my direct material and my direct labor cost. That's my prime cost. Does this change? No, definitely not. Direct material and direct labor are not affected. Guys, all we are looking at is the allocation of the overhead between the products. Your material cost for product A and product B will not change if you're using traditional costing or activity-based costing. Your direct labor cost for product A and for product B do not change if you use activity-based costing or traditional costing. These prime costs do not change. The only thing that changes is our overhead cost per unit. The total overhead doesn't change. It's still 200,000 Rand, but your cost per unit, your overhead cost per unit, that is the only thing that ends up changing. Everything else stays exactly the same. Okay, so we have already looked at what activity-based costing is, so this discussion now should make a lot more sense. So remember, activity-based costing is still absorption costing. We are still including our fixed costs in the cost of our inventory. It's not being expensed. But I told you there were 3 differences. What were the differences? We now have many activity rates. Instead of just one single overhead rate for the company as a whole, we have many activity rates. Second, we look for a cause and effect relationship. So we saw above in our example, setup costs were allocated based on the number of setups. If my number of setups increases, the cost increases. There's a relationship between the cost and the cost driver. There's a cause and effect relationship. And we use volume and non-volume measures. So remember, with traditional costing, we only use units, machine hours, or labor hours. With activity-based costing, we use volume-based measures. So we also use units, machine hours, and labor hours, but we also use non-volume-based measures like the number of orders, the number of setups, the number of inspections, etc. Okay, so why is there now a need for activity-based costing? We saw it above. Using traditional costing, we cost our products incorrectly. Using activity-based costing, we cost our products in a better way. It results in more accurate costing of our products. Why is it important that we cost our products correctly? Because remember, normally what we do is we take the cost of our products and we add a markup to that in order to determine our selling price. So if we've costed the product incorrectly, we are not pricing our products competitively. So it's very important that this base over here, when we're determining what our product costs us to make, we accurately determine that cost so that we can then add a markup and we can then have a competitive selling price. So that is the need for activity-based costing. Why do we need activity-based costing? Well, decades ago, a long time ago, traditional costing was fine. Companies could use traditional costing because of the fact that they had very narrow product ranges. They didn't have a lot of different products that they made. They only had one or two products, and the products were pretty similar. And material and labor were their dominant costs. Overhead costs were relatively small. So remember, if we go from using traditional costing to activity-based costing, that does not change my material and my labor costs. It only changes my overhead costs. So if the overhead costs in the company are not significant, then it doesn't matter whether you use traditional costing or absorption costing. Okay, so a long time ago, because of the fact that our main costs were material and labor, overhead costs were really insignificant. The company also didn't make a lot of different products. They had very narrow product ranges. Then traditional costing was fine, traditional absorption costing. But now companies produce a much wider range of products, and our direct costs are only a small fraction of our total costs. Material and labor are a small fraction of the total costs. And our overhead costs have become considerably important. So the problem with using traditional costing is it's very simple and it's much easier, but it can't be justified anymore because of the fact that we are dealing with such a competitive business environment. It is very important that companies cost their products correctly. If you are costing your products correctly, then it means that you can enter the market with a competitive selling price. If you are not costing your products correctly, then your selling price isn't competitive and you could be losing customers to the competition. So when there is so much competition, it becomes very important that you're obviously costing your products correctly. All right. So what did I say? What do we do with activity-based costing? We now have many different allocation bases or cost drivers. So instead of a single rate, we calculate many different rates. These are both volume and non-volume based, and also we look for a cause and effect relationship. So those were the three things. Instead of a single rate, we calculate many rates. We look for a cause and effect relationship, and we use both volume and non-volume based cost drivers. And this results in a much more superior way of costing our products. So we saw in the very basic example that we looked at, it was a lot more accurate to split the setup cost based on the number of setups instead of using machine hours. However, in management accounting, it's also always important that we only do something if the benefit of doing that exceeds the cost. Okay, so you can see here an organization should only implement and operate an activity-based costing system if the cost of the errors from using an overly simplified system exceed the additional costs of operating the system. Okay, so to put this in a lot more simple English, all I'm trying to say there is you should only use activity-based costing if the benefits exceed the cost. So if the benefit from now accurately costing your products, if that benefit is more than what it costs you to implement the activity-based costing system, then you should implement it. But if it costs you more than the benefits that you are going to obtain, then obviously don't do it. Okay, so just look at the cost versus benefit relationship. So what type of companies will really benefit from using activity-based costing? Organizations with the following characteristics. If there is intensive competition, then they will benefit from using activity-based costing. Because remember, the more intensive the competition, the more important it is for the company to cost their product accurately. And that is where the cost is used and we add a markup to determine the selling price. So if we're dealing with a very competitive environment, we want competitive selling prices, so these costs over here must be calculated accurately. So then it's important to use activity-based costing and not just traditional costing. Also, non-volume related overheads are a high proportion of your total overhead costs. So if you have a lot of costs such as setup costs, quality control costs, ordering costs, etc., then you're going to benefit from using activity-based costing. But if your costs are all volume-based, then you're not going to benefit from using activity-based costing. Then you might as well just use a volume-based measure and use traditional costing, because traditional costing already uses volume-based measures. So if we're dealing with volume-based costs, that will result in accurate costing. But if we're dealing with costs that are not volume-based, then we also want to use non-volume-based cost drivers, which means we should use activity-based costing. And also, the last indicator that a company would benefit from using activity-based costing is if they have a diverse range of products with high product diversity. So what do I mean by high product diversity? I'm going to come back to this entire discussion over here after we've looked at the next example. And after we've covered the next example, this discussion here is going to make a lot more sense. So please go on to example 2. So here we are still dealing with Jasmine Pty Limited with the two products, product A and B. But now my machine hours per unit, both of them take 4 hours per unit. The number of setups, product A has 2 setups per annum and product B has 3 setups per annum. And my production units, 2,000 and 3,000. And I still have the same budgeted setup cost for the year of 200,000 Rand. And guys, please look, my required looks exactly the same. We need to calculate the machine setup cost per unit for A and B if they use traditional costing based on machine hours or if they use activity-based costing. So let's first start with traditional costing using machine hours. Now remember guys, we need to take the total budgeted cost for the entire year and we need to divide by the machine hours for the entire year. So I've got the machine hours per unit. I need to multiply out by the number of units so that I can get the total machine hours for the year. Okay, so it gives me a total of 20,000 machine hours for the year. So if I want to work out my absorption rate or my allocation rate, I take my cost of 200,000 Rand, I divide by 20,000 machine hours, and I get a rate of 10 Rand per machine hour. So first we work out that allocation rate. That's always step 1. Then in step 2, after we've calculated that allocation rate, we can now apportion the cost between the two products. My total cost still stays the same. My total cost is still 200,000 Rand. But using these machine hours and the rate that you've calculated, split the cost between the two products. Okay. And once again, when we apportion the cost, more of the cost is being allocated to product B because product B has more machine hours. Less of the cost is allocated to product A because product A has less machine hours. Actually make sure you answer the required and you work out the cost per unit. The required specifically wanted the cost per unit. So make sure you just divide by the number of units so that you can get the cost per unit. All right. So we can see if we use traditional costing using machine hours, we get 40 Rand per unit for both of our products. Now, instead of using traditional costing, we are going to use activity-based costing. So with activity-based costing, we are not going to use machine hours. but we are going to use the number of setups per annum because this is the setup cost. So the number of setups per annum, product A has 2 setups, product B has 3 setups. So the total number of setups for the year is going to be 5 setups. So we get a rate, an activity rate of 40,000 Rand per setup. That is always what we do first, work out the rate. Once you have your rate, you can then split the cost between the 2 products. So it's 40,000 Rand per setup. Product A has 2 setups, product B has 3 setups, and you apportion the total cost of 200,000 Rand between the 2 different products. And then lastly, we make sure we answer the required, and we take the total cost, we divide by the number of units so that we can get the cost per unit. Okay. Now, the reason why this example over here is so important so we saw using traditional costing, for both of the products, I get a cost of 40 Rand per unit. And using activity-based costing, for both of them, I get 40 Rand per unit. Now, what's important to note is traditional costing is a lot more simple because with traditional costing, we just look at the total overhead cost and we split it between the units. We calculate one rate and we split the cost between the units. It's a lot easier. With activity-based costing, we analyze what the cost is made up of. We have many different allocation rates in order to split the cost. So activity-based costing is a lot more expensive. So you don't just want to do activity-based costing for the sake of doing it if you don't have to do it. So this company here, in example 2, this is a perfect situation of a company that doesn't benefit from ABC. Because if they use traditional costing or if they use activity-based costing, they get exactly the same unit cost. So they might as well just use traditional costing. And they don't need to waste their time or their money implementing an activity-based costing system because it doesn't result in a difference in the cost. What is the reason why it doesn't result in a difference in cost? Is because we don't have product diversity. What do I mean by that? I mean my products consume resources in the same proportions. Both of my products require 4 machine hours in order to make 1 unit. Okay, so both of them put the same burden on my machines. Okay, both of them require 4 hours to make 1 unit. Also, product A needs 2 setups per year, product B needs 3 setups per year. Product A, we make 2,000 units, product B, we make 3,000 units. So over here, you can see we have a setup per 1,000 units for both of them. For every 1,000 units I make, I have to set up my machines again. Here I have 2 setups, here I have 3 setups. Both of them I have a setup for every 1,000 units, which means these products are so similar, there's no product diversity. Because they consume resources in the same proportions. So because there's no product diversity, the company will not benefit from using activity-based costing because it gives me exactly the same answer that traditional costing gave me. So if we answer here, why does the method of allocation make no difference? Because products consume resources in the same proportions. Therefore, there is no product diversity. Which means traditional costing is therefore acceptable as cost distortion does not occur. Okay, traditional costing did not result in the inaccurate costing of my products. Traditional costing gave me exactly the same answer as activity-based costing. So cost distortion did not occur, which means this company shouldn't worry about implementing activity-based costing. They should rather just use traditional costing. So I said to you, let's go back and look at that discussion now that we've looked at the example. What type of companies do an ABC system work for? So companies that have a lot of competition, they should consider implementing an activity-based costing system. Companies that have a lot of overheads that are not volume related, they should use an ABC system. And lastly, companies that have a diverse range of products with high product diversity. We now know what that means. We've now looked at an example. In example 2, we saw an example of a company that had only 2 different products, but there was not high product diversity. The products consumed resources in the same proportions, so they did not need to use activity-based costing. However, if there is a diverse range of products with high product diversity meaning that our products consume organizational resources in different proportions, then you should use activity-based costing. Okay. If all of the products consume organizational resources in similar proportions, so this is what we now saw in example 2. The 2 products used the resources in similar proportions, product diversity was low, and because of that, you consume non-volume related activities in the same proportion as volume related activities, so cost distortion does not occur. Okay, so that seems very difficult if you haven't looked at an example yet, but in our example we saw, because they used company resources in similar proportions, cost distortion did not occur. The company can then use traditional costing and they don't have to worry about incurring the costs of setting up an activity-based costing system.